Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Friday the 26th of August. Well, actually I'm not in the studios of MarketClub in Maryland. I'm actually in my cottage here in Maine, and I have to tell you it's been quite a week in the Northeast where MarketClub and our parent company iknow.com is located. First we had the big earthquake on Tuesday measuring 5.8. By our standards that was huge, not by California of course, which have much bigger earthquakes. But it's also, if that were not enough, we are batting down the hatches as it looks as though we're going to get blasted by Hurricane Irene this weekend. So, and all of this makes the volatility in the markets look like a cakewalk. But let's take a look at the markets right now. Let's go to our portfolio and see how the 6 major markets we track every day and see how we can create and maintain your wealth in 2011. So let's go to the portfolio manager, and here we are. We've got the S&P, which is currently up about 15. Again, we talked about this 177 level as a Fibonacci retracement level. It looks like we returned back down from there, but it's been a volatile session. Let's just look at the charts and see what's going on. So you can see just by the charts alone for the past 2 weeks, we have had a very, very broad trading range. I'm just going to put my telestrator on to show you what I mean by that. And so here we are. We have had this is this very strong downtrend, and we've talked about that. Of course, we've got a nice chunk of that because our trade triangles came in right here, and our monthlies came in right around here. Excellent move down. But for the past 2 weeks, the past 15 days, we've been locked in this sort of trading range, sort of up and down, up and down. And it looks to me like if you normally have a continuation pattern, if this continues and we don't break out over the top here, which would be about the 1200 level, then I think we're going to sink back down and take out the lows and resume the downward trend. Our monthly and our weekly are negative. The only one that's positive is the daily, but we have a minus 75, which means the trend is still down, and we have corrected. Let me just take this off the screen and scroll this down and show you. We've corrected a very, very oversold condition, which was remaining in this market. And if we scroll down, you'll see what I mean. We've come up from this very oversold condition here, tested again, we've come back up, but now we're getting to an area where we should probably get some resistance. Now, if you look further down on this, we can see that the volume hasn't been that great, certainly not as large as it was on the downside. All of these sort of little rallies we've had it seems the negative rallies, negative action tends to be more pronounced than the upward momentum. So that's something to bear in mind. But let's see how we close for the week. This will be the first positive close we've seen in this index for the past 4 weeks. Not unusual. Markets tend not to go down every single week, but I think it's going to be very interesting as we go into September just how this market's going to play out. So let's go to our next market. It's easy to do with MarketClub. I'm just going to click on the little button right here, and that's the silver, spot silver. And you can see here we have I'm going to take this off. I'll just put the monthlies in. I'll pull this in. You can see we have a plus 75. So the longer term trend is still positive in silver, as is the intermediate term trend. What's right now is not positive is the daily. And as you can see, we've had a pretty good pullback from the highs here. We're in a 75 zone, meaning we're still in an upward trend. We need to regain momentum. We probably have to regroup. I would not be surprised to see, and I'll put my illustrator back on again, I would not be surprised to see this market sort of trade around like this for a while and then maybe have another rally up to maybe a halfway Fibonacci point. But I think for the time being, this market has topped out, as has gold. We have to give it more time, of course, but you can see we've gone from a very overbought condition right here to a midpoint condition in the marketplace. I'd like to see the market oversold again and give us an opportunity to get long this market for another pop on the upside. So let's take everything off the screen again, go to our next market, which is going to be gold, which I know everyone loves to talk about and see. So let's take that off and go to gold, and that's the next market. And just quickly click here, and you can see this is a huge, we talked about this top potentially, and of course it was a top or is a top, and we've gone from a very overbought condition, which is fine, but not quite oversold yet. I think we could see maybe some more pressure come down here, and that could just be in the form of just very sideways action, like I described in silver and with the telestrator, I'll just show you really quickly. It could just be something like this. You know, the market really doesn't go down, doesn't go up, it sort of goes sideways. This becomes more of an area we get down to this area like these areas here. Every time we've gotten down here, it's been an excellent buy with the trend. The trend continues to be positive. The weekly and the monthly are still positive. The only one that's negative is the daily, and that can correct itself pretty quickly. So in silver and in gold, we've had the big pullback. It's the first time we went up $400 almost straight away, and now we've had a pretty good pullback, almost over $100, and that's not unusual. It's all part of the trend as the forward progress, pullback, forward progress, pullback, and so on. But I think for the time being, gold was getting very close to that mythical $2,000 an ounce level. You know, it's not unlike that what happened in the 80s when it was going to go to $1,000 and the things reversed. So please be aware these markets can and do reverse, even though everything seems like they're positive, positive, positive. The market action will tell you what it wants to do. So let's go to our next market. And the next market we're looking at is going to be the crude oil. Crude oil, again, this is trend. Look at the trends. Negative, negative, negative. Everything's negative. Minus 90, strong downward trend. It would look as though we are just rolling over. And let me put the telestrator back on here. It would look as though we're just rolling over. You see that? We've gotten oversold out of the box, came back up. We sort of pouncing on the mid level, which is not unusual with the Donchian trading channels. Very, very powerful tools. And we've gone from almost being overbought, not quite, and starting to turn down again. So it's not to say it can't go higher, but it would seem you're going to resume the downward trend that's so prevalent with a minus 90 points, meaning a strong downtrend. So let's see how this plays out. It looks to go Monday, Tuesday, Wednesday, Thursday, Friday. We closed here last week, so we're slightly higher for the week. That could, of course, change before we close today, but nonetheless, it's a pretty flat week for crude oil, and it's just regrouping after kind of a drubbing that it took here in late July, early August. So let's clear the screen again and go to our next market, and that's going to be, well, the dollar index. This is another market. I'm going to put the line chart on here because we've got some data points there that a little bit confusing. But if you just, and in fact, let me take the Donchian channels off. See how easy it is? Just click here, and you can see that right away, we go 6 months. This market has really gone nowhere. And you talk about all the stuff that's going on in the world financially. You think the dollar was going to get killed, but the reality is it's held very, very steady. Which is probably a surprise to most people. You can just draw a line right here, and you can see it's really kind of stayed within those confines. And we've got a very mixed picture here. It's a minus 55, which means it's a trading range. The 73.50 level, we've referenced this many, many times as a key level for this market. It's right here. And if we were to close under that, then I think that's maybe changed the picture a little bit. But for now, you've got the 73.50 level, and then you have this level back here on the dollar index, which around around the 73 level is going to offer support. So far, it's been unable to break the log jam, so to speak. It looks like it's rolling over a little bit here, but it's still not confirmed with the weeklies, the dailies rather, and certainly in the monthlies. So let's pay close attention to that because it is going to offer an opportunity for us to make some money one way or the other. So let's clear everything off the screen, and we'll go to our next market, and that's going to be the Reuters Jefferies CRB index. This is an index we really wanted to pay close attention to because a couple of things here, and that is we tend to think inflation is going to come back into the picture here for the U.S. However, the index itself is not really showing that. We're back into a overbought condition, and let me put the telestrator back on the screen, and that is, we're back in an overbought condition like right here, like we were back here, and here, and here, and here, and here. Now, it's not to say I can't stay overbought, but the reality is more problems potentially for this market that is in a downtrend, daily, weekly, monthly, all down. So here you are overbought in a downtrend. Chances are this market's going to roll over and perhaps do something like we did here, but maybe not so pronounced. But generally speaking, this market is at the upper reaches of its zone. We'd expect it to come back down. And let me just do one thing here. Let me just take this off the screen, clear this up again, and put a candlestick chart on and a couple of other things I want to share with you. So very simply, we'll just put the candlestick charts on here. And you can see the market is sort of just halfway there. I guess probably very close to Fibonacci level. In fact, let's put that on right now. And it's easy to do with MarketClub. When the little yellow box appears here, you are live, and you simply click on the top, drag this down, and you can see right now where this area here, this 336 level, is a Fibonacci 61.8% retracement, and that's not a good thing for this market. I would say it's going to hold the market, and I would expect to see this market come back down and at least test some of these lower levels, at least for the time being. That's our thoughts. We're overbought in a downtrend. Chances are we're going to reverse and go back down. So let's go to see what else we have in our portfolio. We've been talking about the SKF. We've been talking about Bank of America, Warren Buffett's purchase yesterday. Quite frankly, I think he's getting 11% on his money. Who wouldn't want to get that? If you can only get 2% on treasuries, 10-year treasuries, and he's guaranteed 11%, where would you put your money? He's not doing anything altruistic here. This is simply a trade for him and for Berkshire Hathaway. It's just pretty simple. So let's just take a look at Wells Fargo's down, of course. We've got the ultra short, the SKF is down. That's been all over the picture. It's very volatile right now. You can see a big move yesterday, big move today, coming back down. This market looks like it's going to close obviously lower on the week, but that's not unusual. We're getting to a point where we're getting to almost an oversold condition. Not quite there yet, but we probably will get there pretty soon. And I think that's the overall trend again in this market. The longer-term trend is positive. The weekly and the monthly are both positive, and you would look for this trend to resume and for this market to go higher, meaning the bank stocks should become troublesome. If you look at this on simply a line chart, you can see this potential formation that's setting up here, and let me just show you what my feeling is on that. And is if we can just simply draw a line here, we'll project that out, and we can draw a line, let's say here. Then if we stay with these in these confines, and let me just show you what I'm thinking here, potentially, that is we could create a what they call a triangle, which is normally a continuation pattern to the upside. So let's see how that plays out. But there's a lot going on. I just want to say one thing on a personal level here. I've got a great staff that's back in Maryland, patching things up for us and keeping things going. And as we go into this weekend, our thoughts are not so much about the markets, but rather about the destructive power of Mother Nature. Soon Hurricane Irene will be bearing down on the Carolinas, the Mid-Atlantic coast where we are, of course, and the Northeast. Our thoughts and prayers are with everyone who is in the path of destruction here, of this monster storm, ourselves included, and may we all make it through and have a safe passage this weekend. We'll try and do an update tomorrow for you for the weekend. Depends on the power situation and just what happens with Hurricane Irene. But stay safe, and thanks for taking the time to listen to this broadcast today.